Hi everyone, in this video we are going to start examining the double declining balance method. So we have a very similar problem that we had in the past two videos. We are purchasing equipment for $100,000, $0 salvage value, and they are using double declining balance method, and it's going to be depreciated over 5 years, and we need to calculate the depreciation expense for each year. In order to do that, we are going to start with the beginning book value. Something that's very important to consider here is what's called the depreciation rate. And the way depreciation rate is calculated is we are going to start with 1 over the number of years, as if it was a straight line depreciation. So if it was straight line depreciation, we would have 20%, right? 1 over 5. But we are using double decline balance, so we need to multiply that. Sometimes we use 150%, and in that case you need to multiply it by 1.5. Again, this is when you are given 150%, but we are using double declining balance, so we are going to stick with multiplying by 2. So what we need to do is 1 over 5 years. So we are going to depreciate 40% of the book value that we have. Our depreciation expense is going to be the beginning book value multiplied by the depreciation rate. Our accumulated depreciation is going to be what we are accumulating over the years. The ending book value is going to be beginning book value minus the depreciation expense. And that will be the beginning book value of next year. In next year, we are going to do the same exercise. We are going to multiply 60,000 by 40. We are going to get $24,000 depreciation expense. Our accumulated depreciation is going to be what we had in previous year plus this year's depreciation expense. And our ending book value is going to be the difference between the two. Let's complete this exercise. We are going to have an ending book value $36,000, and then our depreciation expense is going to be pretty much the same. We are going to repeat that exercise. Accumulated depreciation, previous year's accumulated depreciation plus this year's, and then our beginning ending book value is going to be the same. For fourth year, we are going to do the exercise one more time. It's going to be multiplying it by 40. Accumulated depreciation of last year plus this year's depreciation is going to give you the total accumulated depreciation. And ending book value is going to be $12,960. The last year is very important. That's why I didn't put a depreciation rate here, because we know that the salvage value needs to be 0. In order to do that, we cannot use for depreciation expense multiplying the beginning book value times this. We cannot do that. We need to depreciate the whole thing, because we are told that the salvage value is 0. As a result, our depreciation expense is going to be what we have as a book value. Our accumulated depreciation, as expected, is going to add up to 100,000, and our ending book value is going to be 0, beginning book value minus depreciation expense. So in double declining method, two important things. Number one, you need to calculate the depreciation rate. Number two, salvage value is not used up until the very last year, and last year is fairly critical. You don't use the depreciation rate. You depreciate the whole thing, assuming your salvage value is 0. If salvage value is different, then you need to take the difference between the two.